today's Targets in Focus, we'll be taking a look at Euro dollar, pound dollar and Aussie dollar. Joining me to discuss these currency pairs is Geoffrey Yu, Senior FX Strategist at UBS. Hello Geoffrey. The euro hit fresh session lows against the US dollar on Thursday after European Central Bank left interest rates unchanged at 0.75%, and ECB President Mario Draghi said the bank would closely monitor development in the markets to see if the stronger euro had an effect on inflation. Based on this, what are your projections for the euro dollar?
Well, right now we still see euro dollar at 137 in 1 month. The basic view is, despite his comments here, he needed to pay at the very least some lip service to general concerns from politicians, especially French President Hollande, about the strength of the euro right now. But it really needs to be taken into context. So if the euro strength becomes an inflation issue, so leads to weaker inflation pressures or disinflation pressures for the eurozone, then Draghi will act. But for now, he doesn't feel there is a need. And clearly, if you look at the numbers, there won't be a need. So given that euro price action is still dominated by risk appetite and positioning, we still see it higher in the short term. However, on a 3-month horizon, we see it lower at 130 due to event risk picking up again.
The pound trimmed gains against the US dollar on Thursday after an ECB press conference, whilst the BOE left interest rates on hold but said it would provide further stimulus if needed. With this in mind, what are your forecasts for the pound dollar?
Carney was clearly not as aggressively dovish as markets were expecting in advance, so the pound has pared back some of its losses of late, but for now we actually still see sterling on a general weakening trend. We see cable trading towards 153 on the 3-month view. The short term may have gone a bit too much. We are looking at 159, some form of consolidation, but given that the BOE will likely do more easing in the longer term, then we will see sterling weaken against the dollar as well. So we have a 153 target with a view that it could drop to 150.
The Australian dollar edged higher against the US dollar on Thursday, pulling away from a 2.5-month low after the release of upbeat Australian employment data. What are your predictions for the Aussie dollar?
Aussie dollar we see at 103 in 1 month and back to parity in 3 months. Clearly the figures are not that pleasant for Australia right now. We will need to be mindful of RBA expectations. They seem to be still waiting for interest rate cuts to feed through, but up ahead we think that they will remain quite dovish, so we are favourable in shorting the Aussie dollar as a trade recommendation right now.
And which currency do you think is the weakest and why?
So right now we believe sterling and Aussie are both quite exposed to downside expectations, and of course of the yen. But out of these three, probably sterling is the most exposed, because a lot has been priced into the yen without much of a pullback. Aussie, there's a lot of underlying flow supporting it as well. So sterling, if we do get more bad news, especially on the growth front ahead, then sterling could fall much slower.
Thanks for joining me, Geoffrey. That's all for now, but here at Dukascopy TV, we'll be keeping you up to date with the latest financial news. For now, though, have a good weekend and goodbye.